Well, hello, everybody watching on Pivot Shift Ahead or wherever you're watching. It's your friend James Shaw. Thanks so much for being here. My goodness, it feels like the market has just been kind of wonky for a while. And we went from buyers moving so quick and offering a gazillion dollars over list price just to get the house without seeing it, to now buyers are like, hold up, wait a minute, something ain't right, because the interest rate has gone from free to not free. And there's so much confusion and concern, and hey, what do we do when it comes to mortgages? And so that's why we brought my friend Loralynne Ball, who is over at Keller Mortgage now, to talk with us a little bit about what we as agents need to know about what's happening, with the mortgage world, how we can support our customers and clients who are looking to buy right now or have questions or concerns, and then just general stuff we've got to know. So that's what we're going to talk about today. Loralynne, you want to introduce yourself to everybody? Hello.
Hi, James. Thank you so much for having me. I am Loralynne Ball, as James said, and I am currently the head of retail sales for Keller Mortgage.
We're so happy to have you. And listen, I got to tell everybody, I trust you. Whatever you tell us is the truth. You and I have known each other for a decade, just from when I was a team leader and you were involved in another mortgage company. We're both here in the Tampa Bay area. I think you know what you're talking about. Gary thinks you know what you're talking about, or you wouldn't be over at Keller Mortgage now. So when I wanted to do something on interest rates and mortgages and helping our people, I knew you were the one. So folks, Loralynne knows what she's talking about. She's going to help you out today. It's been a wild year in your industry, and we've gone in a short amount of time, interest rates under 3% to interest rates over 7%, and just about everything in between. Tell us a little bit about what it's been like for you guys here recently.
Right. So, I'm a little bit older, James, and I've been doing this for 36 years. So I've had the fortune of being through a shift, and as you would call it, a reset. So things have been a little bit crazy. But if we really think about it, free money was a little crazy as well, right? And it was just what's your price? Sure, we'll put it on there, selling higher, having appraisal issues, no contingencies. So that made it really crazy for everyone, quite frankly. But just to put things into a little bit of a perspective, though, last week we did have a pretty good improvement on pricing. So we were then under 7%, which was good for us. But I have some hacks and things to share with agents to help them where they can get borrowers into homes as little as 4 and 7/8. So things aren't that bad.
Well, listen, I tell people the story all the time. When I bought my first house, which wasn't that long ago, it was 2005, I had an adjustable rate mortgage. It was over 9%. When I had the chance to move that adjustable rate mortgage into a 30-year fixed at 6%, I ran to the post office to mail in the paperwork to do that. I was so over the moon about that. And that's not that long ago. That's 2005. So we're not talking forever ago. And yet it's been a wild time. So one thing we need to do as agents is to really help our buyers understand kind of what's going on and what their options are. So let's start with that. How would you recommend, because I know that the LOs you work with are doing this, how would you provide perspective around what's going on with mortgages and mortgage rates and all that kind of stuff right now? How could an agent provide perspective to a potential client about what's happening?
Well, first and foremost, all agents really need to be spending time refreshing or learning for the first time all of the different terminology and mortgage products that are out there. I also think that, which I'll go into some of those for you, James, but I also think that right now, all the vendors that you've been working with, agents, specifically mortgage vendors, have been passengers on your ship for so long. They need to become true partners. And that's what we want to do at Keller Mortgage. And what I mean by that is somebody that's helping you touch your database with information to update potential buyers on sellers in the market, helping you do first-time home buyer trainings to add folks to your database for your future income goals. We really need to come and support you. And there's several classes that we have that has helped train agents. And we want to make sure that everybody has that opportunity. We should be reviewing these mortgage terms at a minimum on a weekly basis. For example,
I'm saying, what are some terms we need to be familiar with?
So seller concessions. I know that that's a foreign word lately, but we need to understand what seller concessions can consist of, what they are based on the loan type that the borrower is choosing. And we have graphs for that to show everybody, if your buyer is going to be putting 10% or more down, the seller can contribute 6% of the sales price towards sales concessions. So that's a big one. A buy down, a popular product right now is what we call a 2-1 buy down. That's a temporary buy down. That's where the buyer can pay money up front to lower the interest rate for the first year and the second year and give themselves the opportunity to climb into this higher mortgage payment as opposed to just dive into it. Adjustable rate mortgages are getting popular again. They went from 7% of the total economy to 12% in the last few months. An ARM or an adjustable rate mortgage can be adjusting every year, or you can get a hybrid ARM where they're fixed for 3 years and then become a 1-year adjustable, or 5, 7, and 10 years. So those are also products that can help ease a borrower into the mortgage payment as opposed to just starting at the higher level. But what I think is so intriguing to me, James, and if I could just share a few numbers with you for a minute, right now you can get 6.625 on a 30-year fixed rate, 6.625. And on a $400,000 sales price with 5% down, that's a $380,000 loan amount. The seller can pay in a concession 3%. So we can reduce that sales price just by 3. And we can get the rate down to 5.625, which is a savings of $246 a month. So imagine if you're out there marketing your listings and you're saying seller will contribute to a permanent buy down with Keller Mortgage. That house is going to shine someone else because it's coming in at an interest rate of at least a percent lower than market rates. Huge win. And it does two things. Keeps our sales prices up, right? Because we're using the concession amount. We're paying top dollar, but we're using the concession to buy down the interest rate, which gets the payment down much faster.
It's saving that buyer $3,000 a year too in their monthly payments. So I love that. It's clear to me that agents must have a relationship or a partnership with someone they trust in the industry. That you've got to be able to look. You don't need to be a mortgage expert as a real estate agent, but you need a mortgage expert on your team who you can go to and say, "What are my options here? What are some things we can do?" You just gave us 3. How important is it that we choose the right relationship or partnership with our mortgage person?
It's so important, James. And I love the fact that you said they don't need to be the know-all of everything. I mean, for the 36 years I've been doing this, real estate partners constantly would say, let me get my mortgage expert on the phone. And that's up to the mortgage expert to take a consultative approach with that buyer and determine what is the best product for them to make for this investment. I want to point out too that last week, mortgage applications rose for the first time since June. So everybody talking about all this bad news, consumers are still buying, and mortgage application, I said rates, and I apologize for that. I meant mortgage applications rose for the first time last week since June. So we have buyers that are getting off the fence for sure.
Okay, how would you explain the last year to a buyer? Let's say I've got a buyer that's sitting down with you, Loralynne, and they are going, look, my friend bought a house last year. Their interest rate was 3%. I'm over here. You're telling me 6%. How would you just set some perspective for them? Because Gary says that's one of our jobs, is to provide perspective to people.
I think the key that we really need to focus on is not necessarily what happened in the past, but what that particular consumer can do today, right? So yes, the feds are trying to control inflation. There's no question. People are outspending. We had way too much supply and demand issues. We're starting to see all of that come in line, and the feds had to come in and do something to slow it down. It had to be done. But today, what we need to look at is since we've been tracking interest rates, the average has been 7.9. I mean, let's just be realistic. 7.9. We're still below that today. And we really need to focus on What is the best vehicle for you, Mr. or Mrs. Buyer, to get into this home? It may not be a 30-year fixed rate. You know what? It may not be 20% down. We may talk to that borrower and say, listen, let's pay off some of these high rate interest credit cards. We really want to look at their whole financial picture as opposed to just one little minute in time that somebody took advantage of a year ago. And let's make the best decision for that borrower today.
I like it. I think you talked about different products, and you talked about, 2-1 buy down. So, and the seller can do that, right? So the seller could contribute toward that to buy down the rate for 2 years, so that you said you kind of then ease in to this higher, I'll put it in air quotes, this higher rate over time. The other option would be, if you wanted to, you could refi, right? So you can always look at that as an option. You talked about an arm. My arm was a 3-year arm, so it was this percent for 3 years. It was 9.25, and then it was going to go up right in year number 4, but I could go down to 6%. So I ran to that. I was over the moon excited about it. But what was great is that it got me what I wanted. It got me my house. I still own that house, by the way. So it's 2022. I still own that house. But I look at it and go, this is what, in that moment, that's what it took, and it got me in, and I was happy. I imagine that's what you find with the borrowers that you guys are working with. At the end of the day, the math is just the math. They want to go buy a house, and they need someone to show them the possibilities. Is that right?
That's right. And think about it, James. We talked about this at an event last week. Renting is 100% interest. Where else are you going to be able to invest in real estate and get historically a minimum of a 4% appreciation? So buyers need to be taught what this investment means, what it could look like for them over time, and how to get into the investment the easiest way possible with the best outcome for the buyers. And I want to point out to agents, we need to be thinking about this with our sellers. We need to really be thinking about, how do we market this property in the best light? There's a lot of stuff going around I see on Facebook and the internet, which is actually false advertising in regards to different opportunities, like what it was a year ago versus what it is now. The numbers actually aren't accurate. So be careful with that. Yep. But when you sit down and you talk to your seller, it's, what are you going to net? Right? Let's just look at your net. Does it really matter how you get to that number? If you're contributing to seller or to buyer concessions or not, let's focus on that. And then let's market the property with the best light on how to get you the best net and get the borrower the best loan. That's a win-win for everybody. And those are things that we used to have to pull out of our tool belt that we haven't had to do for a while. And we're here to help train you on how to do that.
Okay, I love it. You brought up a lot right there that I want to unpack. Number one is this little image that's gone all over social media this week that a lot of people like, and I don't. And I've told people I don't like it, and they get mad at me for it. And there's a couple of reasons why. It's the one that says, okay, here's the price a year ago, here's what the interest rate was a year ago, and here's what the monthly payment was. Here it is now. It's a total hypothetical, and it's not accurate. You run into some issues, like in your industry, that once you start talking about a monthly payment, the government requires that you disclose how you got there. So there's a whole bunch of wording that needs to go on it. But it's also a legit hypothetical. The big one I have is, are homes really selling that much under list price in your market right now? And what expectation is it setting with a buyer? If that's the image that gets them to start talking to you, are they expecting to save that much on the house? And does that I mean, there's a lot. So stop using it. I'm just going to say it. If people get mad at me, if you posted it, delete it. I don't like it. It's dumb. So get rid of it. Okay, we got that out of the way. Number two, though, again, it's about education. We talked about educating a buyer and what are their options and what can they do and making sure you have a partner. But it's also a conversation to have with the seller. How do we make your house really marketable? How can we, and this is an advantage you have as a Keller Williams agent with Keller Mortgage, because you can start working on this stuff right away. What is some advice you'd give to listing agents about conversations they should have with sellers, Loralynne?
Right. So again, the sellers, listen, they're hearing horror stories too. The market is crashing. My house is worth far less. The reality is we're in a perfect sweet spot right now to still have those appraised values and to keep those values up in their particular neighborhood. And isn't that what we really want to do, is preserve equity for our sellers, our homeowners? Yes. So we need to entice them to understand that, A, you only want to take loan or offers from credible mortgage people and make sure that the offer says that they've been pre-approved, not pre-qualified. And two, you want to offer some enticement to the borrower to be able to utilize that in their financing so that they can get the best financing options. I don't know about you, but if I'm looking at two homes and one seller is offering a 3% concession for me to get my interest rate down an entire percent, that's going to be more attractive to me than maybe the carpet that might need to be changed, or getting 10, 20,000 off of the sales price versus just 3%. So we definitely need to be educating our sellers, and we can do that too with open house flyers. The other thing, James, I know I'm talking fast because I'm so excited and passionate about this, but first-time home buyers. Jay came out with and Gary came out with the book, Your First Home. Let's do some first-time homebuyer seminars. Let's partner with you to get some first-time homebuyers and educate them and let them stop taking what the media says and understand that purchasing a home is building their wealth for the future, and show them how to do that in an economic way.
Yeah, and we did a session on that on a Wednesday call. So if you're in the Pivot Shift Ahead Facebook group, just go search Your First Home and you'll see we've done several calls on that. You can see how the workshop works. Bringing in Keller Mortgage as a partner on that makes a lot of sense. Were there any other hacks or kind of tips or tricks you wanted to share with the agents? And then we'll talk a little bit about different education they can get from you.
Right. I think also one of the things we need to look at is homebuyer assistance programs. There's a lot of programs out in the communities and that you can look into for homebuyer assistance, and we're doing everything we can to educate everybody on those. And I also believe that we really need to consider, like I said, ARMs. ARMs are not for everybody. So make sure that you're not selling a first-time homebuyer a one-year ARM. I don't think it's the best choice for them. I think a permanent buy down is better. And just the whole education process, again, as agents, don't feel like you need to know every single solitary nuance of financing, but you do need to know the common verbiage and hacks that are in the book that Jason Abrams has put out called Mortgage Hacks. The other thing, Keller Mortgage offers a lock and shop. How many people wish that they locked while they were shopping for 120 days? You know, this is something you can't beat. While you're out looking and you're qualified, have your rate locked. You have an opportunity to float down if the market has changed, but then you just take the fear out of it, the fear out of interest rates going back and forth. So that's another hack, lock and shop, big, big opportunity.
120-day lock sounds like a great deal, especially with what's happened for rates in the last week or so, to lock somebody in. All right, so if somebody wants to connect with the Keller Mortgage agent, you guys are doing a great job of now getting people in offices and getting people in their local markets and all that sort of thing. What's the best way for someone to connect with Keller Mortgage if first they have a client that might want to use them?
So kellermortgage.com is, you can find your loan officer that way. As you know, we have the direct team, which is a digital experience that have offered great service and value to our Keller Mortgage agents for years. And then we also have a local team. Many market centers have approached me about putting someone in their market center, and we have several of those. Anyone can always reach out to myself, and my email address and my cell phone number will be put out there for anybody. But mostly know that you want to partner with us. We want to be your partner. We want to help you build your database. We want to help you train your potential buyers and your sellers. And we're going to need each other in this market and not just be passengers on your ship.
No doubt about it. And so Loralynne will put her contact info in the chat if you're watching on Facebook so that you have a chance to get it. Hey, Loralynne, training and just different things that Keller Mortgage offers. What do you want people to know about for that?
Training. We have several different training models that we can do either by Zoom or we can do in person. One thing that I haven't talked about, James, that is so important, bulletproofing your transaction. There's so many nuances in a contract that we want to make sure we're bulletproofing your transaction. And we have a class just on that for both you and your contract coordinators to make sure that you're working with a lender that has done everything in their power to ensure that that contract you wrote, we're going to give you back your paycheck in less than 30 days so that you can celebrate that homeowner getting into their home and closing on time.
And where do they find the info on training, Loralynne?
I have a QR code that
Okay.
I can put on the chat too, and put in the Facebook with my contact so that you can sign up for that. We talked about it on the growth call a couple weeks ago with a
Mhm.
QR code.
Yep.
And like I said, all the training is available. It can be done by Zoom, or we can come into your market center. We'd love
All
to do
right,
it.
good. All right, so we'll put that stuff in the chat. If you're watching on Facebook, it'll be there. Loralynne, this is really helpful. Any final thoughts you want to share before we roll out?
You know, don't buy into the media. We're going to be putting weekly updates on rates into the new team leader Facebook as well. And I'm happy to send that recording to you, James, that we can put so that you're on top of it and you're not following what the media is. Diana Olick is a horrible, horrible person that always talks about the market, and it's always in a negative light when in fact it's actually been positive. For example, she said this week things were terrible, mortgages or interest rates are going up, when in fact mortgage applications rose. So keep in mind that the media is always giving you old news. And if you want to be the economist of choice, definitely partner with Keller Mortgage so we can help you do that.
Loralynne, we appreciate you. We're glad you're here. Thanks for spending time with us. And those of you watching, again, if you've got questions, you can comment in the chat too. Loralynne's a member of Pivot Shift Ahead. She pays attention to what's going on in there. Very responsive. And of course, we'll put her contact info in the chat. Hey, Loralynne, thanks for joining us. And to everybody watching, thank you. Go help your people. Gary says, be the economist of choice. Provide perspective to them. Be one with the facts and help them, see there is opportunity for them in this market. Thanks for watching. We'll see you next
Thanks.
time, everybody. Bye-bye.
Bye.